Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. In my previous videos, you've likely heard me mention the possibility of a standard range Model Y being launched with LFP batteries instead of batteries with nickel-based cathodes. This is because I believe it made excellent business sense and very much hope that Tesla took this route. The issue being LFP batteries weigh a lot more and thus range can suffer, but due to modern efficiencies, perhaps they could achieve a decent range. I thought that this would be likely with the new factories in Texas and Berlin using 4680 LFP batteries. But to my surprise, Tesla announced a standard range model in Hong Kong, and then shortly after that, a standard range version in China. Tesla did offer a standard range version in Fremont briefly, but Elon was not satisfied with the range it offered and stopped selling it. Tesla use LFP batteries in their standard range Model 3s, but were using 2170s in the Model Y standard range from Fremont. But now we're hearing that Tesla are using LFP batteries in these new standard range models in Asia. I have done my own research too, comparing the Fremont, Hong Kong and China Model Y standard ranges. All the specifications seem identical, aside from the weight of the vehicles. It would appear the standard range coming out of Shanghai weighs 141 kilograms more than the Fremont version. That kind of weight discrepancy would very likely account for the heavier LFP batteries. In my opinion, the fact Tesla are able to use LFP in the Model Y is a really big deal. This is why I have even mentioned this in videos in the past, saying that I hope that Tesla can use LFP batteries in their Model Y. It will have a serious impact on supply and profits. The LFP batteries likely save around $5,000 per car at the pack level, when compared to the previous standard range with 2170 batteries. That's $5,000 extra gross profit per car, well possibly net profit too, at least before tax. Elon said that he wanted to stop selling the standard range due to the range not being to a sufficient level, but I think it was actually because they discovered demand was so high, Tesla can just sell every model they make, even if it's only the performance and long-range versions, which is outstanding, not to mention the fact they're now sold out for Q3. On the other hand, Elon may have just been referring to the range was not sufficient for the US market, and in his defense, Tesla has not relaunched the standard range in the US, but I strongly expect to see them come out of Texas. Some people think that Fremont will actually make the standard range, and Texas make the long range and performance with 4680s, and that would be a tidy solution. Consumers can opt for the most expensive versions and get structural battery packs with 4680s or the standard range with LFP. Yes, I know LFP also has structural battery packs. Except the thing is, that won't quite work. Well, at least not in the long run, when Texas ramps up. Why? Well, the vast majority of the demand will be for the standard range versions, and Fremont doesn't have the capacity to cater to that demand. Alright, so the LFP model will be highly profitable, but that's not the entire reason I think it's such a big deal. As you're probably aware, Elon likes to express how important nickel supplies are for the future of EVs, and I think it's somewhat a distraction to point the competition in the wrong direction. The only way nickel is critical to Tesla's mission is for semi-trucks and electric planes, both of which could be substituted with boring tunnels and hyperloops. Yes, and of course the Cybertrucks require nickel too. The LFP battery is far more critical to Tesla's missions. It will be the cathode type used in all energy storage and the vast majority of vehicles sold. We've been told that the Model Y could reach, or possibly exceed, 2 million sales a year. The majority of those will be standard range version. LFP batteries use an iron cathode. Unlike nickel, there's plenty of iron and it's cheaper. It just happens to be less energy dense, hence the extra weight. The fact that Tesla do not have to secure nickel supply to deliver the quantity of orders is why it's such a big deal. Tesla can keep scaling up without running into as many supply issues as they would for nickel. Also, with the lower cost LFP batteries, it leaves significantly more margin, which means Tesla can lower their prices if necessary to increase demand further. Until the Model 2 is ramped up, another car that will also use LFP, then the Model Y LFP will be Tesla's biggest selling car. This single version will likely be responsible for about 50% of all of Tesla's revenue, or at least until the Model 2 is ramped up, or robotaxis are a thing. Of course, we will see even more advances when Tesla show us the LFP 4680 battery, which will be the most important battery on the planet. I can't wait to start seeing Tesla go all out in producing the LFP 4680 batteries. It will literally be a license to print money. Every single battery has an application suitable for it that can bring value or save money much more than it costs to produce. And Tesla still won't be able to make enough of them anytime soon, implying we will continually see revenues and profits grow along with the production increases we see with these batteries. For those of you waiting for the next stock price cycle, perhaps around $1,500 to $2,000, well, as far as I can tell, if we see a ramped up Model Y LFP, then I think this alone will take us there. Just imagine if Tesla make an average of $15,000 gross profit per Model Y. With LFP, Tesla can seriously reach a $2 million a year level. Well, that alone is about $30 billion in gross profit. Remember, a lot of people also order FSD, and by that stage, there will likely be a higher percentage of consumers ordering their Teslas with FSD as improved versions roll out. FSD version 9 is truly unbelievable already. But for comparison's sake, Tesla are around $8 billion gross profit currently, scaled annually, excluding regulatory credits. We're talking about 4 times as much gross profit just from this one model, implying total gross profit might not be far off $50 billion, or over 6 times what Tesla do now. When you increase gross profit by that much, when your overall costs don't increase the same proportion, then it does dramatically more to net profit. But Tesla's net profit isn't really an accurate reflection on its success as of current, which seems very difficult for a lot of people to grasp and can't get their heads around these high PE ratios. I'm really not sure what it is about a growth company people have so much trouble understanding when it comes to financials, but plenty of people seem more than happy to advertise their ignorance about it whenever you hear them say regulatory credits. Well, it's simple. If a business has amazing products that have lots of demand, then a good business will keep investing everything they can to grow the business to try and meet said demand. Growth costs money and affects profits. But what I'm saying is that once the new factories have scaled up, Tesla will be a much larger company, and thus the growth will be less relative to the company's cost. Tesla will have a difficult time hiding their success in creative accounting. The numbers will burst out into profits. Such a dramatic increase in Tesla's gross profit and revenue, still occurring for the company even now, should surely give Tesla a valuation of over $2 trillion. But also, the market will witness that Tesla were able to achieve their mission successfully. There'll be an increase in confidence within the company. At this stage, we might also be seeing signs of the Model 2 underway. A reveal, and likely a factory in the making. We'll be told that the Model 2 might sell 3 or 4 times as many vehicles as the Model Y, possibly even more. Tesla proving that they successfully ramped up the Model Y would give confidence to shareholders that Tesla can do it again for the Model 2, only on a much larger scale altogether. But of course, this is solely the auto business valuation. There is FSD on top of that. We think if FSD is feature complete, then it will obviously increase demand for more Tesla owners to upgrade to FSD. But it will also dramatically increase demand for Teslas in general. Tesla are no longer just selling electric cars. They're selling self-driving cars. Tesla have a monopoly on that, and it's a highly valuable commodity to be offering. And then the energy business, and potential robotaxis on top of that. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.